Good morning and welcome to Stock Market Today. It's Wednesday, January 9th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan_Russo_CMT. If you're on Stock Twits, I'm there as well under the same handle. Stock Market Today, brought to you today and every day by Chaikin Analytics. And if you head over to chaikinanalytics.com/today, you can sign up to receive a free email, follow along with this show, as well as receive stock ideas to consider. So let's dive right in. U.S. equities were higher in Tuesday's trading, extending gains from the two prior sessions. REITs and comm services were the best performers, while the financial sector was the laggard on bank weakness. Treasuries were weaker, with the curve flattening. Dollar was little changed on the yen cross, but better against the euro and sterling. Gold finished down about 30 basis points. WTI crude up over 2.5%, rising for a seventh day in a row. So your outperformers, REITs, comm services, industrials, and utilities. Underperformers, the fins, energy, tech, and healthcare. As we get to the desk this morning, S&P futures are up about 20 basis points, extending recent strength. Asian markets were higher overnight, with Japan standing out, up over 2%. European markets seeing good gains. Treasuries mostly weaker for a fourth straight session. Some curve steepening there as well. Dollar is not doing much on the major crosses. Gold down 30 basis points, and WTI crude tacking on another 2%. So a nice rally here for crude oil. And as we dive right in to the S&P 500 chart, we can see this three-day rally has taken us into the resistance range. Support does lie down here at the December lows. That's the key level that we're watching. Resistance, 2580, and then in the 2600 to 2630 range, we are still looking for a less intense test of those December lows. What does that mean? We'd look for momentum divergences. We'd look for breadth divergences. We'd look for sentiment divergences as well. Today is Wednesday. We go through my sentiment work in my note to Chaikin Analytics members. RSI does remain in bearish ranges despite this big thrust move higher we've had. Chaikin money flow still bearish down here. So the indicators still confirming a downtrend. Haven't seen the types of divergences yet that we want to see that will give us conviction that a durable base is forming. Turning now to your market in a minute. What I'm talking about in my note to Chaikin Analytics members is three-day market rally takes us to oversold levels based on the Chaikin overbought oversold indicator. Oil rising for a seventh consecutive day. We'll hit on that. 10-year yield climbs over 2.7%. Bearish sentiment eases, but does remain elevated. And futures do, in fact, point to a higher open here today. Turning now to the major markets from a power bar perspective, still skewed massively in favor of the bears. For the Dow Industrial Average, 0 bullish stocks, 8 bearish or very bearish stocks. S&P 500 seeing a slight improvement. 29 bulls, 134 bears. NASDAQ, 9 bulls, 26 bears. Small caps did outperform yesterday, and they really have outperformed kind of to start the new year. And that's interesting, worth keeping an eye on, seeing if that trend is changing, if it's signaling a little bit of a more willingness to take on risk. Obviously, we'll be watching it closely. 199 bullish or very bullish stocks, 479 bearish or very bearish stocks. Bonds downtick, sending yields higher. But interesting, even as bonds fell and yields rose, real estate was the standout sector in the S&P 500 yesterday, up 1.74%. 1 bullish or very bullish stock, 9 bearish or very bearish stocks for that group. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bearish. Major indexes are mixed. Moving on now, stock of the day. Auto-generated by our algorithm based on our proprietary Chaikin Power Gauge rating. It's Moog Inc. from the aerospace and defense sector. Ticker symbol MOG.A. Closed at 81.78 yesterday, up 4.5%. And the stock has that very bullish Chaikin Power Gauge rating due to very strong price volume activity, very positive expert activity, as well as financial metrics that are attractive. When we look at the 20 factors, 5 each that fall into these 4 sub-main categories, we roll them up and we come out with our very bullish rating. So Moog has a very bullish rating, strong trend, but it is in a weak industry group. And I guess here and now, market's overbought. I want to be building bullish watch lists. I want to populate that watch list with names that have seen good relative performance. And this stock certainly fits the bill. I don't think it fits the bill for a name that we want to buy right now, and here's why. We are just ticking over to that very bullish rating. Market and model are in agreement, dynamic duo in gear. This is what we like to see. This is why we want to potentially add it to a watch list. The stock is overbought and money flow is extremely bearish. We did just retake the long-term trend line, but that long-term trend line is declining. I want to add this name to a list. As the market starts to stabilize, I want to look for the ideal setup to add it to the portfolio. Now is not the time, but we will keep an eye on it. Turning now to the sector tracker. Looking at what's moving over the last 5 days at the sector level. Comms, energy, and discretionary outperforming. Utilities, healthcare, and tech underperforming. What's interesting to me is the comms do have some defensive properties. Look at the names that are really doing well there. Names like Verizon, names like AT&T. Energy catching a bid with oil. That's to be expected. Does appear counter-trend in nature to me. Group still looks bearish by our Chaikin analytics methodology. Consumer discretionary, bit of a relief rally as well. What I do think, as I said yesterday, portfolio squaring and repositioning and getting things back in line by investors. Maybe selling some winners that they had last year, dumping them into the underperforming names. That's just one theory that I have. It does make sense, but a lot of the main trends that we've been focusing on still remain in place. Our industry in focus today, pharma services. 2 bullish stocks, 16 bearish or very bearish stocks over the past 6 months. This subsector has underperformed the S&P 500 by 5.2%. And that power bar ratio, which measures future potential, is very weak. As I said, 16 very bearish or very bearish stocks, only 2 bullish or very bullish stocks. Group is currently ranked number 14 of 21 subsectors. It's moved down 4 slots over the past week. Some of the indicative names there. Very bearish ratings for Aerie Pharmaceuticals, ticker AERI. The Medicines Company, ticker symbol MDCO. We have actually looked at that one in the past. And Myocardia, ticker symbol MYOK, all with very bearish Chaikin power gauge ratings. Very bearish stocks in weak industry groups are the types of names that we want to avoid based on our process. May even want to look for opportunities to open positions to the bearish side. Taking a look at Aerie here. Closed at 39.69 yesterday, 1.68% to the downside. Massive underperformer. Very bearish stock, weak trend, weak industry group. Our analysis shows us that the market and model are in agreement. Ribbon at the bottom of the screen tells us we've been on this very bearish rating since August. Stock begins underperforming in mid-August, and look at what that means. Had you been long this stock and noticed those dynamics, bearish rating begins to underperform, bearish money flow. Even if you were involved here, I'm not even saying get involved to the bear side. If you were long, you could have sold this stock near $60 on its way to sub 35. For me now, it's starting to look interesting as a bearish idea. Market and model in agreement, overbought, bearish money flow, has some good resistance overhead here in the $42 to $45 area, below a falling long-term trend line. For those of you who do trade to the bearish side, this is one you might want to consider. But again, small mid-cap pharma company, be aware of deal activity in the space. Be aware of what their pipeline looks like. You'd hate to be, have a bearish position in the stock, see a good announcement out of the FDA, or see the stock get taken over by a larger pharma name. Keep that in mind as you look at these biotech and pharma companies. Trending now, yesterday's S&P 500 movers. On the gaining side of the void, NKTR provided an update on their collaboration with Gilead. That sent that stock higher by 11%. Remember, I said the JP Morgan Healthcare Conference is ongoing. A lot of news flow coming out of that event. UNP up over 8.5% as they announced a new CEO. Monster MNST up 6.2% as they caught an upgrade. APTV up 5.5%. No real news there. Has a very bearish rating, so may want to consider fading that move. Mattel, MAT, just seeing some follow through to the upside. Stock's been strong last couple of days. Loser side of the board, bad news just continues for PCG. Again, they're considering bankruptcy. Their debt has been downgraded. Stock down 7.34%. Illumina, ILMN, provides some 4Q results that were not in line with what investors were expecting, sends that stock lower. General retail trends coming in negative for the Gap, stock down 4.2%. AMAT down on the negative pre-announcement from Samsung. Remember, that's on the heels of the negative pre-announcement out of Apple. Don't see a ton of news to send CAG down 4% on the day. So now oil. Remember a couple weeks ago we were talking about oil down here. We were talking about it trading at a resistance level. It was oversold. Wouldn't be surprised to see a rally. Would consider the rally counter trend in nature. We have now received a rally. Resistance here starts in the $50 to $52 area. 50-day moving average at 53 starts to come into play as well. If oil stalls out here, could be an opportunity to look to unload some energy stocks. What's interesting to me is even with this strong move from $42 to $50, does not become overbought. Chaikin money flow remains bearish. For now, based on the weight of the evidence, I have to call the rally in oil counter trend in nature. Obviously, a lot of moving parts here. Want to see how it plays out, but I'm not chasing that rally in oil. I'm not chasing the rally in energy stocks. 10-year yield. Talked about this one last week as well. Said we were getting down here near support. We were oversold. Wouldn't be surprised to see a backup in yield. We are seeing that back up. However, I do think the path of least resistance is lower. Below the 50-day moving average, which is declining. Below the 200-day moving average, which is declining. A lot of resistance beginning in the 275, 28 area. Do think yields are likely to fade from here. Wouldn't be surprised if that lends a bid to your utilities and your real estate sectors of the energy market. Just something to keep an eye on. Notice deeply oversold conditions for the RSI, likely shifting to bearish ranges. I realize that we're supposed to be in a rising rate environment, but the market is telling you something different. Trade price, trade what's in front of you. Market, listen to the message of the market. A lot of resistance overhead. I think it's going to be hard for yields to make much headway to the upside. Fear starting to ease a bit, but it's still elevated. As I said, it's Wednesday. I do my sentiment work. This is the 13-period moving average of the CBOE put-call ratio. 2 weeks ago when we last visited this, it was at 1.23%. In lines with levels that we saw back at the initial lows, 2015. What we'd like to see now is for the market to stabilize, and as it tests these December lows, make some lower highs here by this metric. That would be a divergence in sentiment. We'd be looking for the same thing in breadth, which we'll cover tomorrow, and we'd be looking for the same thing in momentum, which we look at every day. So now, this extreme fear in the marketplace has led to this counter trend rally in the S&P 500. If you look as well, the VIX was over 30 last week, and the CNN Fear Greed Index got down to 2. It's back to 24 here this week. But the extreme fear in the market has eased, but these fear levels are still elevated. We're looking for a less intense test of the lows. Finally, let's look at the transports. They are overbought. My stock of the day today in Chaikin Analytics is a bearish call on Kirby, KEX. Part of the reason why is because our top-down approach leads me to believe that transports are overbought. XTN, S&P Transport ETF has a bearish Chaikin ETF power gauge rating. Underperforming really since December. Overbought, bearish money flow, a lot of resistance overhead, trading below the declining long-term trend line. Counter trend rally in transports sets up an opportunity to look for bearish names which have become overbought. Kirby, KEX is one of them, worth consideration on the bearish side of the coin. So that's it. As I mentioned earlier, head over to chaikinanalytics.com/today. You could sign up for the email. You'll be able to follow along with this show. You'll get daily stock ideas, and it comes to you for free in your inbox every day in time to follow along with this show at 9:15. And if you like what you're hearing, help us spread the word. Share our link on social media. I will see you here tomorrow. Same time, same channel. Have a great day, everyone. Happy trading.